Welcome everyone back to Pete's Investing. This week we're reviewing the weekly progress of some key share market world indices and gold, and we've got some confidence with our returns. And just remind you, these updates are updated every weekend, and we want to review if you want to review an index or a commodity, put in the comments and I'll cover it in a future video. And as always, click on the subscribe button and like this video to support this channel. Let's first review the channel's playlists. This is where you find our weekly updates for the indice reviews and also our blue chip share reviews, which we also cover in a separate video. And please visit the strategy playlist, and that's where we look at strategies on which shares to choose, the simple trading strategy, the average down process, and including some money management ideas. So let's look at the ASX 200 first. But first I want to identify, we're looking at a roughly a 5-month period in terms of duration in 15-minute time frame, and we break it down and review each week what we're doing, and these vertical bars identify the weeks of review. So this is our last week we just passed. So the ASX 200 in this case is closed about even for the week. You can see it opened here and it closed around the same levels after dropping off during the middle of the week. It also added to the position here, so we added another 5 contracts. Now this position has been open for a few weeks, opening up back here. And it's been going sideways, hence the position being opened. Hasn't added to the position until now. It's actually broken below our entry point and risen up above that to enter a new position. And again, refer to our simple trading strategy and our average down process to identify and help explain how we enter a new position. Additional position, I should say. Now let's look at the US market. So you can see here the position closed here on Wednesday after opening back the previous week. And here it made a small return of $175, and a new position was opened back here, and that also closed out just before the close of the week with a return of about $245. So this is doing quite nicely in terms of a trade. Let's look at Germany. Similar to the US, Germany closed early in the week here on Monday, and that position opened up back here the previous week, and that returned $1,076 in that little trade. Then a new position was opened here on Thursday, and the position remains open. So that's also doing quite nicely for us as a trade, closing about even for the week. The FTSE, the English share market, that also closed here on Wednesday from the previous week's open, and that returned about $341. Here it opened up again on Thursday with the position remaining open. So here we're closing up for the week since that trade was open, but it's been about level for the whole week from the open. The last index we look at is China. This has been causing some heartache over the past few weeks. You can see that it's been open for some time. We've added positions there and positions there after it's dropped up quite dramatically, but it's been going sideways ever since. But it's making some slow progress towards our break-even of $100,000 here. It started okay in the start of the week. It spiked up, went sideways most of the week, and then it spiked back down to our opening levels again. So it's not far off our baseline of $100,000, and we hope to break that hopefully soon. It needs to break this resistance line here to have any chance of doing that. Lastly, we look at gold. And here again, we're looking at this has been doing quite nicely the whole week. It's been appreciating quite well. It closed here on Wednesday, since it was opened up earlier last week, and that returned $141 in that little trade. Opened up back here, and it's gone sideways ever since. But for the whole week, it's closed up, which is good. Don't forget, each of these trades we're performing on these indices, we're trading 5 contracts for every entry. Let's now look at our results table, and this is our indices in the gold markets we've been reviewing. As you can see here, over the 5-month period approximately, these are the returns in Aussie dollars, and these are the drawdowns. Now the drawdowns, again, just to illustrate, that is from the highest peak of profitability, let's assuming that's the highest peak there, down to that point was the lowest. That's called a drawdown. So that the maximum drawdown for each of these trades, that's what you would have had. So you need to have those available funds in your account to absorb any downside. So that's what it created over the 5-month period, with China being the only negative. And on a weekly basis, we've accumulated about $3,000 for the week. Okay, so that's an update for this week for the indices. Feel free to leave any comments and make any recommendations for any commodities to review, and we'll do those in future videos. Thanks again for watching.